In a significant revision and its third such hike this year, Goldman Sachs has sharply raised its gold price forecast to $3,700 per ounce by the end of 2025. In an extreme risk case, the global investment bank expects the price of the precious yellow metal to even hit $4,500 an ounce. And that means in India too. The rise in gold prices in India has been absolutely phenomenal. They've surged 27% in the first 4 months of 2025 alone, following a 32% increase in FY25. It was at a little over 76,000 rupees in the first week of January this year. A month later, it had touched 82,400 rupees. Prices had crossed 85,000 in March and 90,000 by the 1st of April. And then prices surged past the 1 lakh mark on 22nd April. So let's begin by explaining to you what actually determines the price of gold. The price of gold is primarily determined by the interplay of supply and demand, with factors like global economic conditions, inflation, interest rates, geopolitical events all playing a significant role. US President Donald Trump's recent tariff measures and trade standoff with China have shaken world markets, leading to investors demanding safe haven instruments such as gold. So what's propelling gold prices in India? Well, gold's latest rally is closely tied to recent weakness in the US dollar, which has made the precious yellow metal more attractive to global investors. The dollar index dropped to 3-year lows following disagreements between the US president and the Fed's chairman regarding interest rate reductions. In India, where nearly 85% of gold is imported, the gold rate is significantly influenced by movements in the US dollar. There are also escalating concerns over a potential US recession and the Federal Reserve's recent interest rate cuts. As uncertainties rise, investors turn to gold as an alternative, driving up demand and consequently directly gold prices too. Now, the notion about gold being a safety cushion is best reflected in the purchase of the yellow metal by central banks to hedge against global uncertainties. Several central banks have been ramping up their gold reserves amid the dollar volatility, particularly central banks here in Asia. India is the 7th largest in terms of gold reserves after America, Germany, Italy, France, China and Switzerland. In 2024, according to the World Gold Council, the RBI was the 2nd largest central bank in the world when it came to purchasing gold. The RBI has been actively accumulating gold as a part of its reserves management strategy since December 2017. But it has become more aggressive post-COVID and is one of the major buyers of gold among global central banks. Central banks globally have actively started accumulating gold more aggressively after the Russia-Ukraine war, which started in February of 2022. The RBI too has followed this trend of central banks globally. According to data released by the RBI, the value of the central bank's gold holdings has actually tripled over the last year. Finance Minister Nirmala Sitharaman confirmed that the central bank is accumulating gold to maintain a balanced reserve portfolio. The Reserve Bank of India has been aggressively buying gold because gold purchases help the central bank protect itself against currency volatility and the consequent revaluation of reserves.
The Reserve Bank also is buying gold to make sure that it has adequate reserves of gold and not just a basket of currencies. And in that, one of the currency which predominantly has been held by the Reserve Bank has been the US dollar. But we also have the reserve currencies in denominations of different denominations of other currencies as well.
According to data released by the RBI, the value of the central bank's gold holdings has actually tripled over the past year, highlighting a significant increase in its gold purchases during this period. As per the latest data, the value of RBI's gold holdings surged by 11,986 crores during the week ending April 11th. As of that date, the total value of the RBI's gold reserve stands at 6,88,496 crore rupees. The RBI snapped up 2.8 tons in January and February alone, on top of 72.6 tons last year in 2024. So the overall haul is at 879 tons. Investors are turning to gold not only to protect their wealth from potential market volatility, but also as a hedge against risks posed by trade conflicts, by inflation and geopolitical instability. With these factors in play, more and more experts remain bullish on gold than ever before.